everyone, today we are going to talk about two companies that from their recent filings seem to have good potential ahead. The first company is a technology and AI services leader that has finalized a major acquisition from 400 crore upfront with additional payouts linked to future performance. And the second company is a renewable energy and water infrastructure firm that has acquired a 40 megawatt solar project in Odisha and 115.6 crore, securing long-term contracted revenue with EBITDA margins of 18 to 20%. So basically, both are expanding steadily. One is expanding steadily through AI-led tech solutions, government orders, and international reach, and the other is growing via clean energy and sustainable infrastructure with stable long-term returns. Welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always be in the spotlight but have strong potential for the future. I am Deepali, Equity Research Analyst at Desvelado Advisory, and today we are going to talk about two companies that are making solid progress in their business, and if current trends continue, they might keep growing even further. But before we begin, here's a quick disclaimer. Any discussion, facts, or writing provided are for information purpose only and do not constitute a buy-sell recommendation. Please conduct your own due diligence before making any investment decisions. Now let's move to the first company, Systems International Ltd, a leading provider of technology, AI, analytics, and knowledge services. The company partners with clients to drive digital transformation, offering services across product engineering, cloud enablement, quality assurance, and digital platforms. Recently, Systems approved the 100% acquisition in Novigo Solutions for an upfront 400 crore cash payment, funded through debt and internal accruals, with additional stock payouts linked to future results. So, 8x of the average FY26 to 27 EBITDA. The deal is expected to be profitable from the very first year, creating a combined revenue base of over 2060 crore and EBITDA of 380 crore, backed by Novigo's 44% growth and 25% margins. This also expands the company's Middle East presence and adds new delivery hubs in Bengaluru and Mangaluru, lowering costs and opening cross-selling opportunities for its Optimus AI platform. Management also plans to fully merge Novigo after FY27 once audit and approvals are complete. Looking ahead, the company is seeing faster deal conversion from pilot projects to scale full developments, which can accelerate cash flows and support margins. They are also expanding into Eastern Europe and Latin America, accessing cost-efficient talents to drive revenue growth and margin improvement. Now, talking about the numbers, in FY25, our systems reported 1,741.7 crore in revenue, up 3.3% year-on-year. EBITDA for FY25 rose slightly to 265.2 crore, with margins stable at 15.2%. And net profit declined marginally in FY25 to 131.1 crore, reflecting a strong start of the year. Now, Mudit will be joining it for more. So, Mudit, these numbers and the Novigo's acquisition, how do you see this deal impacting our system's growth and profitability?
Thanks, Deepali. What really stand out to me is how this Novigo acquisition immediately strengthened our systems, AI-led offerings, and creates a solid revenue base over 2,000 crores. Beyond the numbers, the move into the Middle East and the addition of delivery hubs in Bangalore and Mangaluru not only lower costs but also create avenues for cross-selling their Optima AI platform, which could drive high margin growth in the future contracts. If you look at the financials, then Q1 FY26 performance is particularly impressive. Like the EBITDA margin jumped to 25.3% and the net profit margin rose to 16.4%, showing operational efficiency and better utilization of income streams. This indicates that our systems is well positioned to convert its growing pipeline into sustainable earnings. Diwali, I have a question for you. With these operational and financial strength, what's your take on the company's overall expansion plans and their potential impact on the margins?
Absolutely, Mudit. And what excites me further is the company's global expansion strategy. By entering Eastern Europe and Latin America, our systems gain access to cost-efficient talent, which can improve win rates and reduce delivery cost. Coupled with faster conversion from pilots to full deployments, this could translate into steady high growth margins. So, in my view, our system's growth runway looks strong on three fronts: strategic acquisition, global expansion, and operational efficiency. Mudit, do you think the company can sustain the momentum and maintain EBITDA margin while scaling revenues?
That's a really good question, Dipali. I would say yes. provided they maintain execution discipline. The Novigo deal and the pipeline growth are promising, but the real test will be how efficiently, I would say, they integrate Novigo and convert those opportunities from their expanded markets. The thing is, if they actually succeed, these moves could significantly enhance revenue and margin growth, positioning our systems as a leading AI and technology solutions provider globally. So I would say, to sum it up, our systems is building a strong growth engine through first strategic acquisitions that add revenue, margins, and new geographies. Global expansion to tap cost efficient talent and new markets. And lastly, the pipeline conversion and operational efficiency to drive the profitability. So the thing is, like, if the execution really stays tight, right? So our systems could transform from a strong IT services player into a global AI-led solutions powerhouse.
Thanks, Mudit. Now let's move to the second company, Enviro Infra Engineers Ltd, which is engaged in the design, construction, operation, and maintenance of water and wastewater treatment plants and water supply projects for government agencies. Recently, the company, though it's a wholly owned subsidiary, AII Renewables Private Limited, acquired 100% stake in Vento Power Infra Private Limited from PTC India Financial Services Limited for a cash consideration of 115.8 crore. This acquisition enables Enviro Infra to tap into renewable energy growth opportunities, aligning with its long-term vision of sustainable and future-focused business. Uh, the acquired entity is developing a 40 megawatt solar project in Bolangar, Odisha, with a contracted tariff of 4.1 per unit for 18 years, providing stable revenue visibility and enhancing the company's presence in clean energy. The renewable portfolio is expected to deliver EBITDA margins of 18 to 20%, providing additional upside and diversification to the company's overall business mix. By combining renewables with zero liquid discharge and HAM projects, Enviro Infra is building a balanced portfolio of sustainable business with assured cash flows and a long-term growth potential. Now, talking about the numbers, in FY25, Enviro Infra reported revenue from operations of 1068.1 crore, up 46.3% year on year to 728.9 crore in FY24, driven by strong project execution and scaling in its core water business. Q4 FY25 was particularly strong, with revenue of 392.9 crore, a 56.4% jump from the previous quarter, while Q1 FY26 revenue moderated to 240.9 crore due to seasonal effects. EBITDA of FY25 rose sharply to 267.8 crore, with margins improving to 25.1% from 22.8%, reflecting operational efficiency and better project execution. Net profit increased to 177.1 crore, up from 106.5 crore in FY24, with net margins expanding to 16.3% from 14.4%. Other income contributed moderately, forming 1.8% of total revenue in FY25, up from 1.2% in FY24. So, Mudit, with the caution, acquisition, and the strong execution in core water projects, how do you see Enviro Infra growth, trajectory, and profitability shaping up?
All right. Thanks, Deepali. What stand out to me is how this Vento Power acquisition immediately strengthens the Enviro Infra's renewable energy presence while complementing its core water and wastewater business. The 40 megawatt solar project with a long-term contracted tariff ensures predictable cash flows, while the expected 18 to 20% EBITDA margins add strong profitability to the mix. The thing is, if we are looking at the financials, then the 46% year-on-year revenue growth and 25% EBITDA margins in the FY25 shows that the company is not just growing top line but also, I would say, executing efficiently, right? So if we talk about the Q4 25, the surge demonstrates, right? So if we talk about the quarter 4 FY25, the surge demonstrates the ability to scale operations quickly, while FY26 guidance of 1400 to 1500 crores revenue with 20 to 24% EBITDA margins indicates confidence in sustaining performance. So, Dipali, given this performance and renewable expansion, how important is Enviro Infra's diversified business mix for sustaining the long-term growth?
Uh, Absolutely, Mudit. And what excites me further is the company's balanced growth strategy. Combining renewables, zero liquidity starts, and HEM projects ensures diversification and stable cash flows. This approach mitigates risk from seasonal or project specific fluctuation and positions Enviro Infra as a sustainable infrastructure player with long-term growth visibility. So, Mudit, do you think the company can maintain these margins and growth while expanding its renewable footprint?
Okay, I would say yes, provided they continue to execute efficiently and manage the project timelines. See, the thing is, the Vento Power acquisition adds predictable revenue. Like, while the diversified business makes ensures stability and growth. If they maintain operational discipline, then the Enviro Infra I would say could see sustained revenue and margin growth, cementing its position as a leading player in clean water and renewable infrastructure in India. So, to sum it up, Enviro Infra is building a sustainable growth engine. I would say through first, like 3 points that I have: renewable energy expansion with long-term contracted projects, operational efficiency across core water and wastewater projects, and the last one, the balanced business portfolio for the predictable cash flows and profitability.
Thanks a lot, Mudit. That really helped us understand the direction both these companies are moving in. Alright, now let's take a quick look at how some of our previous picks have performed. The first one is Vimta Labs Limited. We picked this at 481.5 rupees and it's now at 706.5, giving a return of 46.7%. And the next is Jupiter Lifeline Hospitals from 1499 to 1405. That's a 6.3% decline. Third one is Lit Revenues Technology Limited. It moved from 194 rupees to 285 rupees, delivering a strong 46.9% gain. And MAS Financial Services, this one slipped from 324 rupees to 311.8, which is a 3.8% decline. And the last company is Alpex Solar Limited. We picked this at 1205 and it's now at 1309.5, giving a return of 8.7%. So overall a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape up in the coming quarters. So here's the QR through which you can access the previous picks covered recently. Now let's see the summary of today's recent filing. First company is R Systems International Ltd approved acquisition of Novigo Solutions of 400 crore, expanding with Middle East reach and delivery hubs. And the next one is Enviro Infra Engineers acquired 100% of Vento Power Infra for 115.6 crore, adding a 40 megawatt solar project in Odisha. FY26 revenue of 106.1 crore, EBITDA margin 25.1%, net profit at 177.1 crore. Now that's it for today's edition of Noisemaker. If you found this breakdown informative, you can scan the QR code to read the full report. We'll back soon with a more simple and clear market updates. Until then, stay curious, stay informed and stay ahead.